Well, hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka, on a beautiful Tuesday morning. Cues coming out of global markets are fairly positive. Wall Street, of course, clocked a record close. It's been raining records on Wall Street, and it has extended that run, last night as well. The GIFT Nifty hinting at a mildly positive start for our markets. Of course, we've been fairly range bound, but hanging on to that 24,300 mark. So, of course, we'll be watching out for whether or not we can see some kind of decisive move coming in on the index or not, as we get first quarter updates from a whole host of companies. Lots lined up over the next 30 minutes. We'll be talking about all the stocks that will be in focus today, and of course all your stock related queries will also be taken up with our technical expert on the show. So if you have any queries, keep them coming in on our live feed on YouTube. But of course, before we move any further, let's take a look at the top stories at this hour. Wall Street extends its record run with the S&P 500 and Nasdaq notching new highs yet again. Investors look forward to the earnings season and Fed Chairman Jerome Powell's testimony to the Congress for cues on the central bank's course of action going forward. Asian markets trade largely higher on a strong handover from Wall Street. The GIFT Nifty is also suggesting a higher start for the Indian market. Crude prices correct with the Brent falling to around $85 a barrel as Hurricane Beryl makes its way to the US West Coast. Gold prices too correct amid risk on sentiment. Well, we have somewhere around 12 to 13 minutes to go for the opening bell. We are hoping for a positive start today. Of course, yesterday it was a fairly range-bound session, but the Nifty did manage to clutch on to that 24,300 mark. We ended with minor cuts, but if you look at some of the stocks that have been drags on the index, HDFC Bank, well, that remains a drag. Of course, first quarter earnings update came in, and it was underwhelming, and the stock has seen has been on a downward trajectory ever since. In the last three sessions, we've seen HDFC Bank trading with losses. In fact, in Friday's session, it saw cuts of somewhere around 5% or thereabouts. But on the other hand, you have Reliance Industries that has been acting as a major support for the Nifty. In fact, in the last 1 month itself, shares of Reliance Industries have rallied somewhere around 9% or thereabouts. So that's one stock that will be in focus as it lends support to the index. The Nifty Bank Index being dragged by HDFC Bank and other banks as well. Remember, Bank of Baroda also came in with underwhelming, first quarter update. Of course, deposit growth remains a pain point for banks, if you compare it to last quarter. So that's something that the street will be watching out for when it comes to banking earnings, whether or not there could be some bit of pressure continuing on the margins or NIMs of banks. If you look at the FMCG pack, that was the one that was standing tall with gains of somewhere around 2% or thereabouts. Positive quarterly updates coming in from the likes of Dabur and Marico, and that has lifted sentiment when it comes to the consumption pack. But today as well, we have Godrej Consumer that has reported its first quarter update. Double-digit volume growth and high single-digit value growth. So that stock will be in focus. Ahead of the budget, railway stocks continue to fly high. Yesterday the likes of RVNL, rallied somewhere around 15% or thereabouts. And fertilizer as a pack also made a comeback yesterday. Good gains coming in there as well. In terms of the futures and options, Qs, the Nifty put call ratio declined to 1.18 vis-a-vis 1.2 level in the previous session. And if you talk about some of the stocks in the F&O ban, two stocks have made an entry into the ban list, and those are Chambal Fertilizers as well as Indus Stars. Still in ban, you have quite a few counters there. Aditya Birla Fashion, Bandhan Bank, GNFC, Hindustan Copper, India Cements as well as Piramal Enterprises. Let's take a look at the fund flow picture as well. Yesterday, after two straight sessions of selling from the domestic institutional investors, yesterday we saw buying emerge. So DIIs bought stocks worth somewhere around 2,800 crore rupees in the cash market. FIIs continue to remain buyers, but yesterday the buy figure was extremely meager. 60 crore worth of stocks bought in the cash market. Before we touch base with our technical expert, let's take a look at some of the stocks that are, or would be making headlines in today's session. Two QIPs have opened up, Jupitor Wagons as well as Pitti Engineering. These two QIPs have opened up. You have Mahanagar Gas that will also hog the limelight given the fact that they have increased CNG and PNG prices in Mumbai, and quite a few other stocks. Do we have a technical analyst now? Okay, we have Osho Krishan of Angel One joining in this morning to talk about the technical setup and to also address all your queries relating to stocks. Great to have you on the show, Osho. 24,300, that's one level that we have been able to defend in the last 3 to 4 sessions. Going forward, do you expect any kind of decisive move coming in on the index today, or do you think it will be fairly range bound with 24,240? That was the swing low that was made yesterday. Would you consider that as a support for today's session?
Very good morning, Nandita. From technical point of view, from the last 4 trading session, Nifty has been into a very strong consolidation phase now to 24,200. As we have mentioned that yesterday also 250 was the swing low. So I'm expecting 24,200 to be seen as the first cushioning support for the markets, while on the higher end 24,400, 450 is the resilience. So we are expecting that market should remain in this range only, narrow range only, while there can be strong actions happening in the broader space. So for key indices, specifically for the benchmark index, even if I talk about the derivative front, so major of the data suggests that the put writers have taken position around the zone of 24,300 towards 24,000. So that is a very strong support zone. While on the higher end, scattered positioning is seen from 24,500 to 700. So that also on derivative front also, the same range is there. On the broader perspective, 24,000 to 24,500 is a broader range. So I'm not expecting a very strong move in the benchmark index, while there will be thematical movers, and one should even concentrate on those sectoral rotations also.
And what about the Nifty Bank Index? We have fallen below that 52,500 mark as well. That was being looked upon as a key support level. Of course, HDFC Bank continues to be a drag. On HDFC Bank, what would you be really watching out for in terms of levels? And for Nifty Bank Index, would you now look at 52,000 as a key support?
Overall Nifty Bank is looking quite skeptical as of now, because it is forming a base of double top on the daily time frame. So if it breaches the zone of 52,100 on a decisive manner, or let's say on a closing basis, then from here onwards we can see a good correction coming in the Bank Nifty. So this is a very crucial level. As you mentioned, 52,000, 52,100 is a very crucial zone, that whether we will be sustaining above the same or not. If not, then we can see approximately 800 to 900 point of correction in the coming period. So this is a very critical zone for Bank Nifty, and we should definitely watch that whether there can be any kind of breather from here onwards, because in the last 2 trading sessions, there have been very stringent performance by Bank Nifty, specifically because of the HDFC Bank. As you have mentioned, HDFC Bank is not performing well, or it has been into a cycle of corrections from the last 3 or 4 trading sessions. So I am expecting that there can be a breather for HDFC Bank, because looking at the overall momentum of correction, now the counter has again came towards the support zone of 50-day exponential moving average. So here onwards, 1600, 1580 should be acting as the support for HDFC Bank, and if it will be having some kind of support near the same zone, then we can see a kind of consolidation in Bank Nifty also.
Okay, that's about the Nifty Bank Index and HDFC Bank in particular. But let's talk about some stocks that will be hogging the limelight in today's session. The first one is Jupitor Wagons, a multi-bagger stock, so to say. QIP has opened up. Floor price is set at 689 or 690 rupees or thereabouts. Just about 30 odd rupees discount from current levels of 718 or thereabouts. In the last, I think 3 months itself, the stock has almost doubled, 80 to 90% kind of returns. Do you see more upside here, because it is pretty close to its 52-week high of 748 or thereabouts? Would you expect the stock to breach that level?
Overall, technically, this counter is looking very positive. It is having a very strong consolidation near the zone of 690, 700. And in the last 3 trading sessions, we have seen a consolidation breakout also. But now, once the prices have been set on a discount, so there can be some kind of cool off or correction coming in the coming period. But I am expecting that there can be strong movement in the coming period from short to medium term time frame. because the overall technical is very positive for this counter, and any correction or any cushioning support should be there towards the zone of 700, 710. So if the price reaches around the same zone, one should definitely try to accumulate. On immediate basis, I am expecting nearly 40 points of upside on the basis of technical charts.
Okay, chart setup looking positive for Jupitor Wagons, but what about a Pitti Engineering? This stock has seen extremely, good traction in the last 1 month itself. I think the stock has gained somewhere around 30% or thereabouts, perched at 52-week highs of 1204. Of course, QIP has been launched. The issue size is at 360 crore rupees according to sources, and the issue price of the QIP is at 1055 around, somewhere around 9% discount to current price. Is this a good time to buy the stock?
See, overall valuation wise on technical front, the counter is heavily overbought. So the recent surge from the zone of 1000 has given a very strong upsurge in this counter, and currently hovering around 1200 odd levels. So technically risk reward is not favorable in this counter, but if someone is holding, they should definitely hold this counter. For fresh position, it's better to wait for some kind of dip. If it does not happen, then 1150, 1160 is a decent level to accumulate it, still at a higher levels. But looking at the trend which it has followed in the previous 5 to 6 months, there has been no stopping by, there has been no breather taken by this counter. So if one wants to ride the momentum, then definitely ride the momentum, but strict stop loss should be maintained around 1120, or else someone is having a conservative approach, better to wait for some kind of dip, because technically it is at a very extremely overbought position.
Extremely overbought. That's what the chart of Pitti Engineering is suggesting. But another stock that would be a newsmaker today, of course, would be Mahanagar Gas. It has hiked CNG prices by 1.5 rupees and domestic PNG prices by 1 rupee in and around Mumbai. Other companies like IGL and Gujarat Gas had already raised prices, so it has followed suit. The revised prices of CNG will be somewhere around 75 rupees and domestic PNG will be somewhere around 48 rupees. In fact, the prices have been hiked due to shortfall in domestic gas allocation and rising gas costs. But talking about the stock, the chart setup, last 1 month we've seen a good up move, but over the last 5 sessions, the stock seems to have taken a breather. Negative returns, 1% or thereabouts in the last 5 sessions. On the back of this news flow, do you expect any kind of leg up? And if yes, what are the kind of levels you'll be watching out for? Because it's still, 100 odd rupees away from 52-week highs. Should that be a major resistance level for the stock?
See, overall, this counter has given a very strong breakout around the zone of 1600, and from there onwards, it has seen a very drastic upsurge. In the last 5 days, it has been consolidated, but again, I am expecting the momentum will return in this counter. And again, 1840, 1850 can be retested in a positional basis. In a very short-term perspective, let's say 2 to 3 trading session, I am expecting 1800, 1850 kind of a scene in this counter. Overall, again, it's not a very lucrative zone, because technically the parameters are extremely oversold. But even looking at the news and momentum in this counter, one should definitely try to accumulate, keeping a stop loss near about 1620, 1630 odd levels.
Okay, that's about MGL, but Godrej Consumer, it has reported its first quarter update. India business has performed well with high single-digit organic volume growth. It saw mid-single-digit value growth. In terms of volume growth, across brands, it has seen a double-digit growth. Growth, of course, has been broad-based across both home care as well as personal care segments. Demand in household insecticides was soft due to extreme heat waves, but Park Avenue and Kama Sutra brands has the performance has been in line with the full year ambition, and Indonesian business has also delivered high single-digit volume growth. And the company expects Indonesian business to deliver double-digit constant currency sales growth going forward. We'll talk about that in just a bit, but there goes the opening bell. We have opened up in the positive zone for now. The Nifty is somewhere about 20 points higher 24,340 is where it's at. We'll see whether or not it makes a dash at that 24,400 level or not. The Sensex is above that 80,000 mark once again. A triple-digit move coming in, of course, 100 point up for the Sensex. The mid-cap index is showing strength as it was doing yesterday as well. But we saw how it fizzled out during the day. Let's see whether or not the mid-cap index is also manages to hold on to the kind of gains that it's witnessing at open. So 0.6% higher for the Nifty mid-cap index. Small-cap index also exhibiting strength, almost 1% higher at the current juncture. The Nifty Bank index had a iffy start, but it has managed to edge back into the green. 52,500 back on the screen for the Nifty Bank index. Let's see what the FMCG pack is doing. Yesterday, it managed to hold out. In fact, it was the top sectoral gainer with 2% gains, and today, of course, it is continuing to see an uptick of 0.5% or thereabouts. IT should come up next. Numbers from TCS and HCL Tech will be declared later this week. Yesterday, IT stocks managed to shut shop in the green. Today as well, the moves are fairly, small. But let's see whether or not we can build traction here as well or not. But auto, that should come up next. And let's see how that is doing at the current juncture. Yes, strength there as well. 0.6 or 0.7% kind of a gain coming in there. Metals should come up next because metals was among the losers yesterday. Let's see whether it's managing to hold out. Yes, that's also opened in the green, 0.3% higher for the metal pack. So almost all the sectoral indices are trading in the green. And what's really leading the pack is the auto pack, and the FMCG pack is also doing well. India VIX, yesterday it saw a 7% uptick. So of course we have seen an increase in volatility. Today as well, almost 2% higher for the India VIX index. Let's take a look at the individual movers then. Maruti leading from the front, 3% gain. I think that's what is lending support to the auto index. Other gainers include the likes of Britannia from the FMCG pack, 1% higher. ITC, after yesterday's 2.5% move, is up somewhere around 0.5% or thereabouts. L&T among the gainers today, M&M, SBI, IndusInd Bank, Adani Enterprises, even Kotak Bank for that matter, trading in the green. Let's take a look at the losers then. Shriram Finance, that's top Nifty laggard. JSW Steel, Reliance Industries under some bit of profit taking after string of gains. So that's down by somewhere around 0.4% or thereabouts. JSW Steel, Tech Mahindra, Grasim, Axis Bank are some of the other losers on the index. But all in all, it's a fairly okay start for the index, holding on to 24,350. Let's see whether or not we can pick up momentum from here as the day progresses. But Osho, looking at the market open, what are the stocks that you would be suggesting for viewers over the next couple of days?
See, overall, there are few counters which are looking very positive to me, and I am expecting a breakout, sustenance of breakout in these counter. First counter is from the insurance space. Nippon Life Science, NAM India, is looking very positive, currently hovering around 52-week high, 670 odd levels. So this counter has seen a consolidation breakout. Yesterday, it has given a very strong traction in terms of volume. So I expect that this should continue its upsurge for the levels of nearly 695 to 700 odd levels. So one should try to accumulate this counter at current levels and keeping a strict stop loss near 645. The other counter which is looking positive to me is DMart. DMart, looking at the overall trend on the weekly time frame, for the first time it is attempting to give a very strong upside movement. So one should try to accumulate DMart at current levels. It is looking very positive, and I am expecting a decent upsurge in this counter. Approximately 5100 is the immediate target on a positional basis that one can expect with DMart, while on the lower end 4700 should be seen as the stop loss.
All right, those are the recommendations coming in from Osho. But Osho, we were talking about Godrej Consumer. It has opened very flat, but in fact, I think it's lost somewhere around almost 1% or thereabouts. The first quarter update was pretty encouraging because volume growth was in double digits and the value growth was in high single digits. But here on, do you see a trade in Godrej Consumer from the FMCG pack?
FMCG is looking very positive. Godrej CP, Imami Limited, Dabur, all these counters are looking very positive. Godrej CP, any dip towards the zone of 1400 should be acting as a very strong support. So even one should try to accumulate this counter for the higher target of nearly 1460. It is giving a channel breakout. So I'm expecting that in the recent period, one can expect a very strong upside in this counter. Immediately, 1460 is the first target or first resistance. Once it breaches above the zone of 1460, then another 15 to 20 odd points of rally can be seen in this counter.
Okay, that's the view on Godrej Consumer. Hold that thought, Osho. We'll come back and talk about specific stocks and viewer queries as well. But let me also bring on board our next guest for today. Joining me is Anshul Saigal, who's a market expert, prominent market voice. Great to have you on the show, Anshul. We have clocked fresh highs. We are around that 24,500 mark, but we seem to be consolidating now after the record run. Here on until budget, do you expect moves to be largely range bound, and how should one approach the market as we step into the earnings season, the budget and the likes?
Morning, pleasure to be with you again. Thanks. If you look at the markets on the frontline index, the index is trading at about 20 times 1 year forward earnings. And if you look at the mid-cap index, that's trading at really lofty valuations of over 30 times 1 year forward earnings. And small-cap index also is quite stretched. Now, at these valuations, clearly, one has to be cautious at the broader market level. You can't expect the same kind of returns that you've got over the last 1.5 years to actually accrue henceforth. As a result, caution is something that I would suggest to your viewers. Of course, for the smart investor, there is always opportunity. You will find individual opportunities in the broader markets, where again, if there is volatility in the markets, these stocks will also be volatile. But from current levels, many of these stocks may have upsides. But the quantum of such stocks will be quite limited as regards the broader depth of the markets. And to your point about the budget, what we are seeing just now is that certain PSU stocks, say in the defense, as also in the railway space, those have gone gangbusters, really gone through the roof in the last 1 month, in the expectation that the budget will have something special for them. Now, given that this kind of return has played out, it's unlikely that the budget will capture something more than what has already played out. As a result, most of the expectations are in the price. One should be cautious at these times. And it's really not a bad strategy after you've made so much money over the last 1.5 years, and particularly in the last 1 month, to take some money off the table. I wouldn't say that you should be out of the markets, but clearly taking some money off the table at this time is not a bad strategy.
Okay, taking some money off the table when it comes to PSUs would not be a bad strategy. But should one look at FMCG now then? Because the first quarter updates have been fairly encouraging from the likes of Dabur, Marico. Some bit of rural or signs of rural recovery visible now. We've been talking about rural recovery for a long time now, but looks like that seems to be playing out now. So should money flow into FMCG? Should one book some profits into PSUs and perhaps look at these FMCG names now?
If you look at the FMCG names, last nearly 3 to 4 years, these companies have consolidated, really gone nowhere. And in this time, of course, the volume growth has also not been, anything to talk about. But of late, particularly in the last quarter, many of these FMCG companies gave indicators that they will see volume growth in the rural markets, and that volume growth is starting to show up in the current quarter. In the updates that many of these companies have given in the previous few days, the update seems to suggest that rural economy is picking up. There are initial signs, and that is reflecting in volume growth. As for some of these companies, volume growth has surpassed street expectations, and as a result, clearly there is likely to be interest in these names. These being defensives, and then there is tailwinds on volume growth. Both of these the combination of both of these is good for these stocks at a time when the rest of the market is expensive and has really gone through the roof, particularly the small and mid cap space. So given that this space will capture outflows from the other segments of the markets, those outflows seem to be coming towards this segment of the market. And also, given that they've consolidated over the last 3-4 years, you're getting favorable valuations. All of those combined, this space, like you rightly said, looks interesting.
Right, the other pocket that has fairly disappointed or underwhelmed when it comes to first quarter updates is the entire banking space. Most of the, banks have, seen very muted or, slow deposit growth, of course, on a quarter-on-quarter basis, but that remains a pain point. Banks which are just about started firing up, do you think there will be a break to that up move now? Because seems like margin pressure will persist for some of these banking names, especially the likes of HDFC Bank.
The name that you took, of course, that is a special case because they've really they have issues regarding the merger that they've done, and as a result, their CD ratio is unfavorable at the moment. However, again, the point that you mentioned on deposit growth, clearly deposit growth has been relatively weak in the system at a time when the markets are doing so well. Deposits are, really not the favored sort of investment class for the larger population. And as a result, deposit growth has been slightly weak. And at the same time, we are seeing credit growth being quite strong, between 15 and 20% for the better part of last year. Now, given this setup, clearly costs have gone up for many of the banks, particularly for the larger bank that you mentioned. There, the cost has gone up, which has hit margins. But clearly also, if you look at the PSU banking space, pick a stock and it will be trading at 5 to 10 times price to earnings, around 1 time price to book. Even the private sector, large private sector banks, those which were trading at over 4 times book, now trade at 2.5 times book. So there has been in the private sector banks a sort of a consolidation, a time correction over a period of time. And in the PSU banking space, given the tailwinds on growth in corporate lending, even there, at 1 time price to book, 5 to 10 times price to earnings, there isn't lofty valuations. So in the banking space, we do expect that downsides may be limited. You may have to bear some time correction, but when the upsides do come, upsides could be material. So risk reward clearly in the banking space looks favorable at this time.
Okay, the risk reward is looking favorable for the banking pack, but within the IT pack, of course, experts have pointed out that there may be valuation comfort in large cap IT, but today there's a report from Bernstein on the engineering research and development end of the market, and they have initiated coverage with outperform on a lot of stocks like Persistent, KPIT Tech, Coforge and the likes. Of course, Coforge, there was an acquisition and the street wasn't really convinced about that. But nevertheless, Bernstein has initiated coverage with a market perform on this particular stock, Coforge. But, the likes of Tata Elxsi, how does this space really look? The IT pack, would you tilt towards these ER&D names, or would you say that stick to the traditional large cap IT names, because of course there are expectations of recovery kicking in sometime this fiscal itself, if not the first half, perhaps the second half. So should one play IT from the large cap standpoint, or should one look at these names which have partnerships with global innovators like Microsoft, Tesla, or would you think that the runway for growth for these ER&D companies is much higher than the traditional IT large cap names?
First of all, I've in the past been a portfolio manager. Now I'm an individual investor. And if I put on the hat of a portfolio manager where I'm managing third-party monies, I will obviously then need to structure a portfolio around the index, and as a result, IT needs to have some weightage within my portfolio to ensure that I'm aligned to the index to some extent. But as an individual investor, I have, there is really no pressure for me to invest in IT at all. So I need to understand whether IT is lucrative as an opportunity for absolute returns in comparison to other segments of the markets. And in that context, if you look at IT companies and their valuations, many of these companies, despite the consolidation over the last 2 years, trade at 25 to 30 times price to earnings, which is a significant premium to pre-COVID levels. Pre-COVID, these same companies used to trade at 14 to 20 times price to earnings, and today they trade at a significant premium. If you look at the ER&D companies, again, those companies which were trading at maybe 20 times price to earnings. In fact, I was invested in my portfolios in many of these prior to COVID and also through COVID period. These companies used to trade at 15, 20 times price to earnings. And, lo and behold, COVID happened, and you look at some of the valuations today, they are nosebleed valuations. Some of these companies now trade at 60, 70, 80 times price to earnings. And of course, the stocks have done exceptionally well. Earnings have gone up, but they haven't gone up in line with how much the stocks have gone up. Some stocks are up between 10 and 20 times, while earnings may have compounded at, say, 15, 20%. But that's a far cry from where the stocks have gone up. So, by and large, I would say that IT needs some more consolidation. And particularly the ER&D space, I think that is a space which is quite expensive at this time, and at the margin you'll make some money here. Risk reward is really not favorable. So I would be a little cautious on the IT space, unless I'm someone who's looking to hide, that is, be defensive. I wouldn't go out and buy a lot of IT.
Okay, point taken. But which is that one other pocket that would be a complete avoid at the current juncture, and which is that one pocket that is a must-have, in terms of a portfolio construct?
So one, I have mentioned banking. I think that in housing finance companies there are very interesting opportunities. Some of these companies have capital adequacy ratios of over 40%. A growth path ahead of them which is over 25%, and these companies have consolidated again for the better part of the last 3-4 years. Valuations are favorable. It's here that one finds opportunity. Capital goods and manufacturing, there are individual opportunities in that space which look quite interesting, quite lucrative. Certain opportunities
In a staggered manner, one should try to accumulate this counter. The counter has a potential to give a very decent returns on medium to long term perspective. From very short term perspective, yes, it has given a very strong reversal kind of a pattern on the daily chart, and one can expect the momentum to continue on the higher end. I am expecting the first resistance to be seen around the zone of 760 to 770 odd levels.
Okay, look at accumulating in a staggered manner rather than going all in on Adani Power. But let's talk about the next query then. This one is coming in from Shanu Chakran, wants to know your thoughts on Inox Wind. They've bagged some order, and because of that the stock is up 4.5%. The stock has been doing well, has been on an upward trajectory. 177 is the 52-week high. Any levels to watch out for here?
This counter is on the verge of breakout. So on the weekly time frame, the level is approximately 165, 166. The time it gives a closer in this week above 165, then that could be seen as a very strong opportunity to accumulate this counter. Immediate basis, near approximately 25 point of rally can be expected from this counter. So approximately 185 to 90 kind of a target can be seen in this counter.
Okay, watch out for those target levels. But the other query that's come in on our feed is on Manali Petro. The stock is fairly buoyant right now. In the last 1 month also we've seen double-digit returns. Right now it's trading high by about 4% or thereabouts. It's been buoyant, and it's almost at that 52-week high level of 99.3. Triple digit moves, I mean, would you expect the counter to hit triple digit today itself, because it is fairly buoyant? And what should one do? Should one enter at these levels?
See, overall, there has been a decent traction in the volumes because if I look at the overall volume in the 5 to 6 trading session, in the first 15-20 minutes, it has taken that much of volume for this counter. So I expect that from here onwards, there can be a good up move in this counter. 3 digit, yes, it can test that, I guess, by today only. But overall, the momentum is very positive and looking at the overall trend, expecting a target of nearly 106 to 107 in short-term time frame.
Okay, that's the view on Manali Petro. Hope that answers your query. But a couple of more queries to go really. Another query coming in from Pawn Rajesh wants to know your thoughts on REC and NTPC at present level. Should one, attempt a fresh entry? REC, how is the risk reward looking like? Because the stock has clocked in a 20% up move, in the last 1 month itself. And NTPC, would you say for these power stocks, the risk reward is a little unfavorable?
For REC, PFC, yes, definitely the risk reward is definitely not favorable, but the momentum in these counters don't fade away also. So these counters have started becoming a very attractive levels for the traders fraternity to accumulate. Overall trend is very positive. It is giving REC is giving a breakout on the technical time frame, but the risk reward is not favorable. If one wants to accumulate it, keep a strict stop loss of 590 and then accumulate for a higher target of nearly 640. But if only the time frame is shorter, if one is having a higher provision or higher period of accumulation discounter, then one can definitely stay intact without any stop losses for REC. NTPC is again looking very positive. It has seen a kind of consolidation in a very long period, so I'm expecting it will give a breakout once it breaches the zone of 390. So one should wait for a breakout. Currently, it is hovering in a very rising channel. That is a very positive sentiment. So 365 to 390 is the range. Buy on dip, sell on rise is the current approach. The time it breaches the zone of 390, then we can witness approximately 30 point of rally in this counter.
Okay, that's the view on the power pack, including the likes of REC and NTPC. But, a couple of more queries have trickled in and I would like to take them as well. Bajaj Finance, Debu K wants to know your thoughts on this stock. Hasn't done much, hasn't done anything at all in the last 1 month. But the first quarter update has been okay. However, the stock hasn't really reacted to it. How are you approaching this stock now?
This counter is consolidating near the 200-day SMA. So until it gives a very decisive upsurge or decisive breakout from the zone of approximately 7,300 odd levels, then only we can see some kind of traction in this counter. Else there can be some kind of sidelines or consolidation in the near period. So one should definitely wait for 7,300 to get breached because that will have a double bottom breakout in this counter. So after that, one should definitely accumulate for higher target of nearly 78 to 7,900.
Okay, that's the view on a Bajaj Finance. Last query for the day. It's on a PVR Inox. Advait Joshi wants to know your thoughts on this stock. Kalki has released and it's already a blockbuster. But if you look at the stock movement in the last 5 sessions, it has hardly given any returns. Would you be looking at this stock at all, PVR Inox now?
See, overall, this counter has seen a good traction in the last 2 to 3 trading weeks from the zone of 1300 towards approximately 1500 odd levels. But 1500 is being a very strong resistance to this counter. The 200-day SMA and the psychological mark of 1500 both place a very crucial resistance for this counter. So until it breaches the zone of 1500, one should stay sidelines. On the lower end, if it goes towards the zone of 1380 or 1400, then one should try to accumulate for targets of 1500, and once it sees a breakout above 1500, then only one can attempt to enter into this counter for a higher targets.
Okay, that's the view on a PVR Inox. But with that, we've come to the end of the query segment. I want to thank you, Osho, for taking out time and joining in this morning. Look forward to our next interaction. Have a great day.
Thank you. Thank you so much for inviting me.
Thank you. Well, with that, markets are in fine fettle. Right now, we are cruising along that 24,370 mark or thereabouts. So, we are looking to make a dash at that 24,400 mark once again. Mid caps in fine fettle, and so is the Nifty Bank Index, clutching on to that 52,500 mark as we speak. Of course, it's also the Fin Nifty expiry today, so financials will be in focus as a pocket. But, we're leaving the market in fine fettle, no complaints there. Maruti is the top gainer with a rally of somewhere around 4%. And Titan, of course, has also made a good comeback after yesterday's, 5% dip. We are looking at a 1.5% kind of gains coming in on Titan as well. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for joining in and, of course, watching our show. But you guys stay tuned to Money Control throughout the day for all your other news and updates. And have a great day ahead.